taxes are only going to go up when you consider the risk on the government's balance sheet and on the taxpayer's balance sheet. When it comes to all these mortgages, Canada is even more leveraged than the US was at the exact peak here. Canada is trying to bail out the housing market with 30-year mortgages on insured mortgages. So we're going to get into what this announcement is, what the unintended consequences are likely going to be, whether it's even going to actually do anything in this video. So first of all, let's get into what exactly is going on. So Canada tries to bail out real estate developers with 30-year mortgages. The reason why they've said that is this is purely for new construction, and they're saying that this is going to help improve affordability, which is just completely backward and totally laughable in this situation. So Canada is rolling out new policies to help its highly indebted households support soft demand for new housing. So think about this. Again, you're talking about helping the subprime portion of the housing market. The insured mortgages in Canada are mortgages where banks wouldn't want to lend to these people unless a third party, which is the government essentially, the CMHC, comes in and insures that mortgage, and then the borrower pays to essentially insure that mortgage against default. Along with everything else the federal government is doing in Canada, you can see that they're clearly trying to stimulate the housing market and the housing bubble because they know it's the only trick that Canada has. The one trick pony of the housing bubble in Canada, that's literally all it has. I might explain why there's so many outflows of foreign investors right now because of the housing bubble deflating essentially. So Canada's rolling out new policies to help its highly indebted households support soft demand for new housing. Earlier today, the government of Canada announced new measures to increase the amount of capital used to buy homes. New home sales have been weak at these prices, and rather than letting prices fall, it appears policymakers have concocted a scheme to make the higher prices more affordable, not just by increasing the amount of debt households can carry, but they're also encouraging first-time buyers to divert more money from the country's capital markets and put it towards housing. And you can see how this deck of cards, literally this house of cards, no pun intended, is falling apart and crumbling, because obviously if more and more people are allocating more and more money towards housing, that doesn't drive productivity higher, it drives it lower. And we have an opposition, the Conservatives, which are essentially proposing an even more housing-driven economy. Just build, build, build. Think about the unintended consequences later. I mean, I think all the policymakers out there are just stupid when it comes to this, or just act stupid, should I say, because they definitely understand what's at play here. It's a massive housing bubble. Pierre has even done a series of videos on it where he essentially goes through different crisis events and tries to make out we're going to somehow rebuild the country like after World War II. I mean, with the type of people that we have now, that's never going to happen. I mean, that is just pure fantasy. But anyway, he has to cling to some sort of hope, and that's what he's going to cling to. But this is not good. I mean, this is just going to increase prices, increase demand at developers, because it's specifically aimed at developers. And this is great news for the banks and great news for the oligarchs. As usual, we know that all policies in Canada, they say it's for you, but it's actually for them. And that is what has just become so clear as day to me over the past couple of years, is that it doesn't really matter who you put in place. The power network that's in place already is just going to still be there essentially, and still siphon and suck all the power out that you and I think we actually have, which we don't. So anyway, Canada to help first-time home buyers pay higher prices. Chrystia Freeland announced new measures to help with affordability starting August 1st. Mortgage lenders can start offering 30-year amortizations to first-time home buyers. These loans will be restricted to new construction. Again, this is just really bailing out developers. I mean, this could put more actual downward pressure on housing prices, because you think about it, most of the houses being sold are not new construction. Obviously, if you're taking more demand away from there, but I would argue the first-time home buyer demand is so little in Canada that it's really going to have a negligible impact on on demand at all. So anyway, and I know some people at developers, so I'll continue to monitor what happens there. Canada says improving affordability. Central banks call it stimulus. Measures like those introduced today are called demand inducement schemes. They're exactly as they sound, a way to get more people to purchase something. They usually involve expanding debt service capacity or diverting capital from less important areas to help stabilize prices. And think about that right now, because we need more businesses coming in. We need more capital going into businesses right now and not into housing. And they're just doubling down on the old housing bubble, essentially, as it crumbles. I mean, I just think it's absolutely hilarious. And we'll get into the other thing they're doing, which I think is even more dangerous when it really comes down to it. All of which are things that none of us voted for. Let's just make that clear. It was followed by another one once prices started to fall, a strategy they thought so effective they declared the market correction over by 2008. Spoiler, it wasn't. The big difference is the US openly stated these measures were designed to stimulate demand and increase home prices, whereas Canada has said the same type of strategies will improve affordability. So obviously they're not that stupid. They know what they're doing here. But what's very, very interesting is once again, we're just following and mirroring what the US did before 2008, which seems all but too suspicious to me. I mean, humans act in patterns, obviously, but we're just doing the same thing when it comes to mortgage fraud, subprime lending, mortgage insurance. I mean, the only difference really is that most of the risk is actually on the taxpayer's balance sheet. And that's what's hilarious. Obviously, we've got more tax announcements that have come out with the budget. And obviously, taxes are only going to go up when you consider the risk on the government's balance sheet and on the taxpayer's balance sheet when it comes to all these mortgages. So it's absolutely insane. So that is what's happening there. And now I want to go into this again because this is hugely important for people to understand. And this is the CMB program that I do believe will influence lending. Whether it influences prices is a different story at this point. Obviously, with what's happening with the housing bubble, we have seen it looks like household debt to GDP peak. This is credit market debt to GDP, one of the highest in the world. But if you look at household debt to GDP, there is a clear peak in 2020 and 2021. And if you look at the United States, exact same chart. And if you look at where it peaked before, it peaked around 2007, 2008. It was before that crisis event actually happened in the banking system. So obviously then you saw a deleveraging of households. And even though there are some bubbles in the United States, households just aren't as leveraged as they were back in 2008, whereas Canada is the complete opposite. You know, Canada is even more leveraged than the US was at the exact peak here. And when you go to private debt to GDP and you see the exact same thing going on, so the United States peaked out in 2008, it's back and peaked again in 2020. So this is private sector debt. Canada did not. It actually took 2008 to leverage up in that sector, as you can see from this chart. And it's just gone absolutely crazy until we got to the peak in 2020. And those peaks never, ever mean good things. And if you look at the US, around 233% at the peak. And then if you look at Canada, over 300% at the peak. I mean, just insane leverage in the private sector. Meanwhile, you have that insane leverage. You have consumer sentiment below 50, which is bad. And you can see how this is just stably kind of deteriorated over the past couple of years, which is no surprise considering what's going on. And if you look at any time there's been some sort of crisis event, what's happened to government debt to GDP? It's gone up. 2008, same thing. Throughout the years Conservatives were in, Trudeau got in, same thing, came down a bit before 2020 and then skyrocketed. And people think this is going to change. It's not going to change. I hate to break it to you. They are going to continue inflating your money away, whether you like it or not. And that's why it's important to look at real prices instead of actually just looking at nominal prices all the time. So later this week, the Canadian government will, through the Bank of Canada as an agent, purchase $3.75 billion of 10-year duration Canada mortgage bonds in a syndicated transaction. The upcoming CMB purchase is the first of what is intended to be an ongoing program in which the government will purchase half of the CMB issuance going forward, $30 billion in 2024 alone. This is not quantitative easing. It is a monetary policy tool by which the central bank purchases term assets by creating reserves. Rather, it is fiscal policy policy, the federal government plans to expand its general borrowing in order to purchase financial assets. And really, when you think about what's happening here, it's a stealth bailout of the banking system. It's very similar to what happened in 2008. People just don't understand or realize it. If future governments persist with purchases at this pace, they will eventually own half of the Canadian mortgage bond market, or about 200 billion in assets. So it's crazy. So they'll own half of the CMBs that they created, which I just think is absolutely crazy when you really think about it. I mean, this housing has never been so government subsidized. It's never been so more managed by government, so much more influenced by government. Prices have never been as distorted as they are right now by all this stuff that goes on, like mortgage insurance. So it is crazy what's happening. And just in case you didn't know, CMBs, and just in case you didn't know what are CMBs, eligible Canadians taking out mortgages will often need to purchase mortgage insurance in order to obtain an acceptable interest rate on their mortgage. This mostly applies to those without access to large down payments. The largest provider of this mortgage is the Canadian Mortgage Housing Corporation, a federal crown corporation, a government corporation essentially. Mortgage lenders originate CMHC insured mortgages and package them up into complicated prepayable instruments known as NHA mortgage-backed securities. The NHA MBS then needs to be sold to financial markets in order to obtain the actual cash to be lent to homeowners. CMHC raises these funds in a very efficient way via the Canada Housing Trust, a conduit that purchases NHA MBS in a hedged form and funds those purchases by issuing simple market-friendly fixed-rate bonds known as CMBs. And basically, these CMBs, what they are in a nutshell, is it's a bond and it has a little bit higher interest rate than a normal government bond, but it is backed and has the rubber stamp of the government and their credit rating. So if any of the CMBs go bad, guess who's on the hook for it? The government, which indirectly is us, the taxpayer. So it's absolutely insane what's going on. The amount of intervention that's going on in the housing market, a mortgage market, well, it just continues and it's not getting better anytime soon. So anyway, if you've enjoyed this video, I would highly recommend that you check out this video here. And if you're looking for a VPN to get around all the censorship laws in Canada, check out the VPN that I use, expressvpn.com/marketmania. I'll see you in the next one. Take care.